Hey, crypto family. Hope y'all are doing good today. The market's green again, and I'll go over some analysis in a minute, but it's good to see. And today we're going to go over the first article. It says Wall Street Journal, Bitcoin and crypto strongly correlated with gold as stock market struggles. So this is nothing new. A lot of people have been making comparisons between Bitcoin and gold for the past couple of years and how Bitcoin is the digital gold, but this kind of helps solidify that. And it says Bitcoin is trading at a strong correlation with gold over the past 5 days as traditional investors jump into crypto, according to a new report. New research found from Excalibur Pro shows Bitcoin trading at 0.84 correlation with gold, as reported by the Wall Street Journal. In addition, a second strong Bitcoin correlation is emerging as the stock market struggles. Bitcoin is traded at a 0.77 correlation to the Chicago Board of Options Exchange Volatility Index in recent days. The index measures short-term S&P 500 options prices and is used to gauge how fearful investors are about the market. So this is good to see that, Bitcoin is trading more strongly to gold than ever. And again, gold is that safe haven a lot of people look for whenever the stock market is declining or something is going wrong with the US dollar. So for Bitcoin to get that correlation now as well is something great to see. And it shows a lot of investors are starting to see Bitcoin as a safe haven more and more. So again, this article is good because it just brings up what a lot of people have already been talking about. And again, it kind of brings it to the mainstream where people are really starting to see it as that digital gold. And it's just that view is that is just starting to become more and more prominent as the future comes. So again, something I'd like to point out and something that is just good for us for the long term. Again, when stocks do have another downturn or the US dollar collapses, then we will see that Bitcoin and gold correlate stronger, I believe. Now, the second article I want to cover is by Cointelegraph, and it says daily traded volume on Huobi's crypto derivatives platform breaks 1 billion. So it says the daily trading platform of cryptocurrency contracts on the Huobi derivatives market has broken past 1 billion, according to a press release shared on Cointelegraph on December 27th. Huobi Global, which operates the world's third largest crypto spot market trading platform, launched Huobi DM last month. The new platform allows traders to trade Bitcoin and Ethereum contracts that aim to allow for arbitrage, speculation, and hedging. So again, for those who don't know, Huobi has always been a exchange with a lot of volume, but I mentioned a couple videos ago that they were involved in a actual lawsuit that claimed they're faking their volume. And it says here, a recent study from weekly crypto outlet Dyer claimed that data sampled from across 8 leading crypto exchanges, Binance, OKEx, Huobi, Bitfinex, Kraken, Poloniex, Bittrex, and HitBTC, showed that 60% of the still listed cryptocurrencies are now trading at lower volumes than in January. Over 20% of these were seeing less than 90% of the volumes they saw during January's crypto market bull run. So it shows there's still a lot of volume to be had versus the volume that we had in January. So again, keep that in mind. Once we do get that volume again, prices are going to skyrocket. But it does say that right now it says a recent report from the Blockchain Transparency Institute claimed that the majority of the top 25 Bitcoin trading pairs listed on CoinMarketCap are based upon highly inflated false volumes, showing evidence of malpractices such as wash trading. Huobi, alongside HitBTC, OKEx, and BitHum, were among those exchanges implicated in the researchers' findings. So again, always keep in mind, some of these top 25 exchanges, just because they're in the top 25 doesn't mean they're legitimate. A lot of these have fake volume to inflate prices to allow new investors to come onto them. So again, always do your due diligence, do your research, and because I remember also on January 3rd of 2019, there's going to be a thing called proof of keys, and a lot of people are actually going to be participating in it, where they take their cryptos off of exchanges and put them in a cold storage wallet to really force exchanges to solidify that they actually have the coins that they say they have on their exchanges. So that's going to be something I'm be interested to see, and I know a lot of people are participating in that. But again, always keep in mind that these exchanges could go bust anytime, so just always keep your coins safe because you never know which are showing false volumes and which actually have the coins that they're saying they have. So just something to keep in mind. Now, I mentioned the market. It's green today, which is great to see. On CoinMarketCap here, we see Bitcoin's up 3% to $38.95. Ripple's up 3% to 37.4 cents. Ethereum's up 8% to $133. Bitcoin Cash is up 7.6% to $173. And EOS is up 2.65 or 6% to $2.65. Now, looking at some Bitcoin analysis here, Bitcoin, we can see right now it's holding at 38.53. So again, it's maintaining that 30. Right now, I mentioned that 3,800 level was resistance when it broke down. And from there, we can see that right now it is changing to that support. So just something to keep in mind now if we can maintain that 3,600 level. But it is good to see we bounced off of 3,600, which also coincided with the 128-day moving average. Now we're looking to break above this 50-day moving average, which is about 38.70. And then from there, if we can break above the $4,000 resistance level, then we'll look at continuing higher. Now, something higher than the $4,000 resistance level. Now, if you check out my friend M. Pavlovsky on Twitter, he's a great guy, good analysis. Check him out. He's actually showed this inverse head and shoulder. So you can see here on the daily chart, you can see this left shoulder, the head, and then the right shoulder. And then we could potentially go up to 42.50, which also is part of the neckline, but also coincides with this resistance here between 43.50 and 4600. So just keep watching out for that and to see if we can pass that. But with that, if you enjoyed the video, please like, comment, subscribe. Until next time, thanks for watching.